Good Monday morning. Welcome to Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. My name is Dustin Hobbs. I'm the communications director here at the California MBA. We're excited. We've got a great guest this week. Excited to chat with him and find out what's going on with him, his company, and his thoughts on the future of the industry and sort of where we're at right now. But before we do that, let's have a quick message from our sponsors over at Incelerate. Incelerate is the leading mortgage lead management, CRM, and engagement platform that helps lenders close more loans by increasing efficiency gains across sales, marketing, operations, and management. And they've just recently announced their first of its kind mobile app that they launched earlier late in August. This groundbreaking mobile app features full lead management, lead distribution, click-to-call, inbound call routing, first call automation, and two-way compliant text messaging, and provides access to critical loan information without having to use a laptop or log in to the LOS system. It also empowers loan officers by intelligently distributing leads, managing pipelines, prioritizing their day, automating best practices, and personalizing the borrower's journey, all from the mobile app. So for more information or to catch a demo, visit incelerate.com, or you can call the number listed in the description below to schedule a demo. Well, with that out of the way, let's toss it over to Susan Milazzo, our CEO, for this week's update. Susan?
Hi, this is Susan with your weekly update. So we have the Western Secondary Market Conference happening virtually in just a few days. That's happening September 23rd and 24th. We are very excited to be welcoming Glenn Stearns, CEO of Kind Lending, and of course, star of Undercover Billionaire, as our keynote speaker, as well as the Empower session that we're having, an Empower leadership panel. That's led by, of course, Marcia Davies with the National MBA. And our panelists for that session will be Patty Arbiello with New American Funding, Christy Burko with Wells Fargo Home Mortgage, also incoming chair for the National MBA, and Selby Meyer with Plaza Home Mortgage. So don't miss your opportunity to hear all of these industry icons and great leaders in the mortgage business at our Western Secondary Market Conference. You can also contact any of our sponsors to get their promo code to register for this conference free of charge. So visit our website and find out who those great sponsors are, contact them, and find out how you can register for free. I'll look forward to seeing you virtually at our Western Secondary Market Conference in just a couple of weeks. Back to you, Dustin.
All right, thanks, Susan. All right, let's get on to the main event here. I'm excited to welcome Gary Clark to the podcast this week. Gary is the COO of Sierra Pacific Mortgage, actually here in the Sacramento area, based out of Folsom. Gary's a longtime friend of the association. Gary's also chair this year of the MBA's Residential Board of Governors, or RESBOG. So welcome, Gary.
Oh, thank you, Dustin. Pleasure to be here.
Yeah. Well, let's start at the beginning here. Let's dive in. So I'm curious, Gary, what's your background in the industry? How did you get started, and what led you over to Sierra Pacific?
So, like most people, I started in the industry as an originator. So I was originating single-family loans for probably about 4 years, and then, of course, began my management career and became a branch manager and moved on from there. So I joined Sierra Pacific about 5 years ago. I was president of another mortgage company here in the Sacramento area, and owned by a number of individuals that hired me to actually run the company for them. They were all primarily loan originators. We rolled that up and actually sold the company. When that concluded, I was able to fortunately join Sierra Pacific Mortgage.
Right on. Well, so I'm curious, what led you to the operations side of the business? What interested you there more than, say, the production side?
Well, I'd done both over the years, but I spent, before I moved back to the Sacramento area, I was 14 years at IndyMac Bank running a number of channels there. The most recent group I ran was their asset-based home loan HELOC lending program, and so we did asset-based securitizations. So that had me in operations, and then right towards the end, I was actually running an operations center here in Sacramento for IndyMac, covering the western region in Hawaii.
Okay. Okay, interesting. All right, well, let's look at sort of what's in the news these days. If you're anywhere in California, essentially, or especially in Northern California right now, on top of the issues with the COVID-19 pandemic, we've also got the challenge of now wildfires throughout the northern part of the state. If you could see behind me through the window here, it looks like it's a a pretty dark scene outside with a red sun. I'm sure outside your window too, Gary, it looks about the same. So I'm curious, how has the company adapted to sort of both of those challenges that you're facing these days?
Well, so obviously they have to monitor the situation with the fires on a daily basis. We generally send out an update daily to our operations teams, on those zip codes that have been potentially impacted by a fire. So as you know, for all our agencies and investors, we would have to have a reinspection done to ensure the property is still standing and represents sound security. So it has been a challenge. It's really unfortunate that we experience this here in California. It devastates so many families when it happens. But if you live in Florida or Texas, you're dealing with hurricanes and other events. So it's just unfortunately become a way of life for us here in California.
For sure. Has it been easier or harder, or I guess more of an acute issue at this point than dealing with the with the pandemic issues?
Well, it's a little. What's a little harder about it is really understanding the potentially impacted area. You don't want to cast a net so wide that you're holding up closing loans that aren't impacted by a disaster like a fire. So that's probably the biggest challenge, because when you look at a fire map that's put out by some of the state agencies, they don't exactly overlay a zip code for you. So it can become a little challenging.
Yeah, yeah. All right. Well, then I'm curious. So from a an operations management standpoint, how have you guys been able to maintain the corporate culture that I know you've been at Sierra Pacific for a while now, and I know it's a real good, strong corporate culture there. How have you guys maintained that both during the pandemic and now the fires? I mean, just it seems like one disaster after another. How do you guys keep in touch and maintain that culture?
Well, so as you know, Dustin, it all started in mid-March. We had to rapidly redeploy our staff to a work-at-home situation. Fortunately, most of our systems were cloud-based systems to begin with, so it was just making sure that our team members had the proper equipment in terms of a laptop and a couple of monitors if needed. So we've been able to maintain that situation for the last several months. We've started bringing back some people into the offices about a month ago, but even now today, we're probably still only running 15 or 20% of our staff is actually working here on site. And so it still is pretty lonely. You walk around a 40,000 square foot building and maybe there's 25 people in here spread out, obviously, but it's been a challenge. And of course, as you mentioned, culture, that's the toughest thing. And, I'm on, calls with RESBOG and other committees, and it's a challenge for all companies, is maintaining that personal touch and that identity of the company with that employee as they now are working remotely. So we've tried to hold a number of weekly update calls. In the beginning, we were holding, almost daily calls with our staff. And then as people became more comfortable and more used to working remotely, we've backed that down to weekly and even bi-weekly calls. So it's worked out so far so good. But again, being able to maintain that company culture is really going to be a challenge for everybody going forward. Because quite honestly, when this all ends and we get back to some sense of normal, there'll be people that will never return to the office environment. And that's just the way it's going to be. And so, we need to figure that out for sure going forward.
Yeah, well, so to that point, what's your sense on how much of the change that has happened over the past couple of months out of necessity, how much of that has either maybe accelerated changes that were on the way, or maybe has spurred something that's now going to be a permanent change to the business operation?
Well, it certainly spurred a number of things and moved the needle forward on a number of the technology areas. Certainly in terms of remote online notarization, or just e-closing and e-documents and e-signing in general. People all of a sudden, had to move into that arena, whether they were doing it already or not. So we're seeing a much higher level of electronic signings of documents. It's a little better customer experience, quite honestly. Of course, the challenge is always the settlement agent and the notaries on some of the documents, but that is all going to accelerate and at a much faster pace. And we've seen the agencies provide some tools and some benefits in terms of using powers of attorney to execute documents where they were a little more stricter in the past. And of course, we're seeing a higher adoption of electronic notarizations for sure.
Yeah, I think especially like you mentioned the notarizations, I think the acceleration to moving that to be a sort of a permanent fixture or feature of the process is, I think everyone's going to welcome that change for sure.
Yeah, absolutely.
Yeah. So kind of sort of switching gears here a little bit. What's your sense, or what are the economic indicators that you're keeping an eye on these days? You sort of figure out, maybe your plans for the rest of the year, plans in the next year. What are you keeping an eye on more? Is it unemployment or GDP or how home sales? What are you looking at?
Well, so we work closely with the MBA, and so Michael Frantantoni, their chief economist, does provide monthly updates and then quarterly reforecasts. So we rely a lot on their forecasts, as well as forecasts from the National Association of Home Builders, National Association of Realtors. One thing that we know for sure, that the pace we're lending at today, $1.1 trillion in Q2, a record number, a record volume of loans never done before. We know that pace will stop. We just don't know when, and that's the problem. We've all seen, those of us that have been in the business for a number of years have all experienced that sense of euphoria that ends when you come up the next day and realize that something happened in some part of the world, economic activity has changed, and all of a sudden the rates are moving the other way, and it can move very quickly, as you know.
Yeah.
So,
that's very true.
We're fortunate the Federal Reserve has pretty much indicated that rates will stay at these levels for, the foreseeable future, and that can be months into years. Forecast to, currently, call for a pretty big decline in production next year. But does that start in Q1, Q2, or maybe it doesn't start till 2021? If I knew the answer to those questions, I'd be sitting on my yacht in the Bahamas having this call.
Absolutely. So to your point about, at some point the refinance boom that we're in right now will start to wane. How are you guys preparing now for that inevitable, rebalancing between purchase and refi?
So we've utilized, certainly some temp staff. We're utilizing some vendors to provide support in various functions. So, we know that the staff, needs will certainly come down. Obviously, people, and not only in our company and all the companies in our industry, are working a very high level of overtime right now, and so burnout's always a concern. So that'll be the first area that will change. Obviously, the amount of overtime, both during the day and on the weekends, that'll drop and come back in line very quickly. Hopefully, there won't have to be too much done in the way of staff adjustments going forward, but that's always something that happens in our industry from time to time. And finally, we watch the mix of our production in terms of purchases and refinances. And we're already trying to focus more on the purchases than the refinances. We prioritize those through our system because those are the loans that'll be here, day in and day out.
Right. So is it more of a focus in priority both at the staff level and in your sort of your external marketing, or is it? I assume both at this point.
Yep, absolutely. In this market, the refinances, the phones are ringing, the emails are coming in, the staff is responding and handling the amount of the volume of refinances. But we can't forget our partners in the real estate industry and in the new home builder industry. We have to address those needs as well.
Yeah, I think that makes sense. Yep. So sort of a bit of a pop quizzy type question. What keeps you up at night these days? What's the one, maybe worry out there, or the one unknown that or if anything is, causing you to worry these days, what would it be?
What's the FHFA and the GSEs going to do next? We all saw about a month ago where the shoe dropped, and we had very short notice that all of a sudden there's going to be an additional loan level pricing adjustment of a half a point for doing a refinance. So, we were fortunate through the efforts of the Mortgage Bankers Association and the state associations like CMBA, to where we had a call to action and we were able to get that delayed. So what concerns me now is what's going to change next, and I'm sure there will be changes. So that concerns me, especially around rules around forbearance. We struggle with those, as you know, at the state level. We've had challenges here in California. We've had challenges in other states where states want to put their own 2 cents in on the forbearance rules. And so that keeps me up at night as well.
Yeah, no, that makes sense. I mean, you're right about, I think you put it gently there with the FHFA giving us a little notice. It was, virtually no notice before that increase was announced. So you mentioned RESBOG and MBA there. So what's the biggest? You're the chair of RESBOG this year. What's the biggest initiative or challenge that you guys are facing this year, or initiative that you're taking on?
Well, so we obviously start the year with a number of priorities and things that we want to work on and address during the year. Well, that list went out the window in March, and so the MBA, as well as all the state organizations like the CMBA, have always been involved very heavily with the changes we've all had to deal with around forbearance and loan delivery issues and changing guidelines and underwriting of self-employed borrowers and all of those things. So we've spent at RESBOG and I'm sure at the state level, addressing a number of those issues. So those things, that the speed of those changes that were coming almost weekly, if not daily, in March, April, and May, really has subsided, and we're in a little bit more of a stable period. So now we're looking at and working on addressing the change in what's called the QM regulation. That is actually out for comment now. So there's two components to that. There's actually the change to the QM and ability to repay regulation, but also today in our current QM guidelines, loans that are delivered to the agencies do have an exemption from the QM requirements. That exemption expires in January of 2021. So the CFPB has proposed and will do an extension of that exemption, but they'll do it in a way that it coincides with a new regulation when that comes out. So we're currently working with MBA staff to put our comments together around the changes in the QM regulation and the ability to repay rule. So that's where our focus is right now. Additionally, we're looking at and working on the GSE changes, the recapitalization of the GSEs. There's a lot of work and a lot of complexity in that process as well. So we're doing a lot of work in that area too.
Yeah, so I'm curious. We had Doug Duncan on a few weeks ago from Fannie, and we talked a little bit about recapitalization, and timeline there seems to be pretty extended at this point. What's your thought on timeline as far as the QM changes and the proposal there? Is that end of this year, I'm assuming, or is that?
Well, we should have a proposal either by the end of this year or early in Q1 of next year. And of course, there'll be another comment period. Then they'll publish a rule, and then it'll go into effect. And there'll probably be a little bit of an extended implementation time frame. So certainly sometime towards the second half of next year, of 2021, we'll have the new QM inability to repay regulation out.
Okay, that makes sense. Yeah, we still got a ways to go before it's finalized. So when it comes to advocacy, I'll close with this question for you. You've been a sort of a fixture at our annual legislative day here in Sacramento, and I know advocacy. Obviously, you just had a nice chat about advocacy at the federal level. How important, if you were talking to one of your colleagues in the industry that wasn't maybe involved with the California MBA or the National MBA and didn't see the value maybe in their advocacy work, what's your answer to them?
So I think the easiest demonstration of the impact of advocacy was this recent change with the refinance LLPA. So earlier this year, we probably had the Mortgage Bankers Association has a group called the Mortgage Action Alliance. There's no charge to join it, but it's a way that you are updated and alerted to not just national issues, but state issues, and we've used them in California to address some state issues. But membership in that group was around 23,000 people early this year. We're now over 80,000, we're now over about 60,000 members of the Mortgage Action Alliance. And when the announcement came out about the refinance LLPA, we were able to generate over 80,000 communications to every member of the Senate and virtually every member of the House of Representatives. And that brought a lot of pressure on FHFA to make the change and delay the implementation of the refinance LLPA. So it's absolutely vital to be part of, something like the Mortgage Action Alliance.
Yeah, no, I completely, and you make a good point about it being super simple. It's a piece of cake. You can sign up for free in less than 5 minutes. And also, to your point that I think a lot of people may get sort of discouraged when they see, something coming down from a regulator and realizing, okay, what can I do about that? I mean, there's nothing I can do about that. I mean, it's not like I can go and, vote out the, FHA commissioner or the CFPB director. But to your point, I mean, you can certainly put pressure on your elected representatives who then can put pressure on those regulators and, affect change that way.
Absolutely. And you mentioned the annual legislative day at the state here in California. Most states will have those. Of course, we have one at the national level in Washington, D.C. as well. And as you mentioned, I've participated in the past. And what I found very striking is how little they actually know about housing.
Yeah, absolutely. And I think it helps to put an actual face on the, on the term mortgage bankers or the mortgage industry. And sometimes I think from a legislative standpoint, they may see lobbyists, they may see advocates on either side, but they don't actually ever talk to an actual mortgage industry professional. So showing up to those events in person, I think makes a big difference.
It absolutely does.
Yeah. Well, hey, Gary, thanks again for your time today. It's been great to chat with you again, even though we're only a few miles apart here, Sacramento and Folsom. It's been a while since we actually saw you in person because of everything that's gone on. So great to see you, and hopefully see you in person here soon.
All right. Nice to see you, Destin. Thank you very much.
All right. Well, hey, that's all the time we got for this episode of Connect. If you enjoyed the conversation, make sure and click the subscribe button. You can also follow us on Apple Podcasts or Spotify, SoundCloud. We're on all of those platforms as well. And we'll be back next Monday for another episode of Connect, and we'll see you then.